What's happening, traders, and welcome back to Shift Trading. What I'm going to start rolling out, this being the first of, is trade recaps. Hoping, given the markets, I can do one a week for you guys. Just seeing what I've managed to capitalize on in the week. This will disclose my losses, my wins, everything that I've seen in the market. And essentially, if I haven't traded, I'm just not going to release one. And I'll start continuing in publishing some outlooks for you guys, maybe midweeks and Sundays. Again, I just need to see a bit of a demand for it, and I'll go through that for you. But what I've managed to capitalize on this week is USD Swiss franc buys and Euro USD sells today. Okay, USD Swiss franc I managed to take on Monday, and I'll go through that process with you right now. So what I'm looking at now is quite simple. If we get to the higher time frame quickly, you'll see we're coming from a weekly fair value gap. Okay, market has tapped, given a reactive candle, last week printed bearish. I am now looking to ride and take out that low. We are going from internal to external range liquidity. If market goes and reverses at this point, that's fine. I've managed to take my trades. I'm in and out of the market. So be it. I was wrong on the higher time frame. But what I'm looking at is the footprint from the previous week and previous day telling me what I need to do. I'm not making it more complicated than that. So if I drop down to the daily, what I saw yesterday is market managed to take 3 previous days highs, closed bearish, and when I woke up and looked at the charts this morning, as simple as I was like, oh, I'm going to look to take a sell today. And it is that simple, guys. I'm coming from a higher time frame, PD array. Market has taken liquidity and closed to the downside. I'm anticipating that the previous day's low now would be my first draw on liquidity. We drop to the 1 hour and we try to identify obvious swings for liquidity on an internal range. So we go there, and we go there. What I then do is I drop to the 15-minute, and we have my midnight open. Because I'm looking to go short, I want to see the market move to the upside. I want to see it trade above the midnight open, sweeping that swing, or this one, either or. But it needs to occur within my 2 standard deviations of the Asian range. Okay. So let me just draw that on for you guys, so you can see what my process is in the morning. Asian range, standard deviation. Within 1 or 2, I'm looking for my PD arrays. Here we have a rejection block that managed to sweep liquidity, break to the downside, market structure shift. External range liquidity, previous day's low. Market then trades up aggressively, putting a lot of traders on the wrong side of the market that assume you don't need to use a daily bias or have a daily candle in your favor. This is wrong, guys. If you're getting taught that you don't need higher time frame narrative and bias, just stop trading at this point. You need to understand what the higher time frame draw is to manage to capitalize these trades. You don't want to be the guy that's taking a lucky win now and then. Okay. And as simple as market reaches up into this, gives an aggressive close to the downside, and I managed to get in the trade. Now there's some rules to this. We keep it as simple as possible here at Shift Trading. We quickly realized that trying to teach people lower time frame entries just doesn't work. If you're sitting there on the 1 minute or the 5 minute anticipating chock and change in the state of delivery and inversion fair value gaps, you're going about it completely wrong. Completely wrong. You just need to figure out a way to get into the market. The entry is the last thing that you need to focus on. And it's essentially the easiest thing. Your entry should not be complicated. You have a bias. What is our bias? Bias is to the downside. We're respecting bearish order flow. What is your narrative? Our narrative is market open, trade to the upside to continue to the downside. Thirdly, how do we intend to capitalize on a trade with that narrative and bias? For me, it's an engulfing candle to the downside. That simple. Not sitting there on the 5 minute trying to complicate things, trying to look for a 1 minute shift. I have an engulfing candle, gets me triggered, and instantly in the trade hits take profit. Done. Finished. Finished for the day. Next trade. As simple. Monday. What do we see? We have a 1 hour fair value gap. Market trades underneath. Not chasing the market here. Market hasn't tapped anything. There's nothing relevant over there. What we tend to see in this scenario is that there is no clear liquidity. Okay. Yes, there's a bit of a swing there, but we want to see distinct liquidity. Okay, that's a bit of an open spike down and that's it. In my opinion, we want to use New York session, having pullbacks, targeting that liquidity. If there's nothing on the left, we can anticipate that something will be generated on the right. What do we see over here? Trade under the Asian range. Sweeps, breaks to the upside. Absolutely not. You're sitting tight. You're waiting. Market pulls back. Creating liquidity. Engineering it. Creating the fuel to move to the upside to take the swing high. The market does that. And if you drop to the 30 minute, there it is again. Same formula. I try to sit here and look for a breaker structure to the upside and get in on my fair value gap and have that pretty picture on YouTube or sound like I know what I'm talking about. It's just the entry is the simplest part about trading. OTE trades, find the PD array, put your limit order there, walk away. Confirmation entries, look for big engulfing candles. But again, I've been in the industry for 6 years. There's certain criteria that needs to get met for this engulfing candle. Okay? That makes them high probability. Alright guys, I hope you see how simple we approach the market, how we're using the Asian range. Again, under your standard deviations, using the midnight open, understanding that bias and narrative is everything. Looking for a liquidity sweep and targets moving to the lowest hanging fruit being your previous day's highs and lows and taking what you need from the market. Okay, now in this instance, I didn't hold all of that. I just got in, took what I needed from the market. I partialed, I think it was over here. And then my final take profit was above these relative equal highs. All right, traders, I hope that helps you out. What I'll do is I'll release, like I said at the beginning, I'll start releasing more videos on recaps, what we look for in the market. And again, all of this is just issued in our little community. I've got a community of 3 of us. And we sit and we chat in the mornings and we have a Zoom session and we call these out. Every single day, we're basically on the right side of the market. Just understanding that by using the higher time frame, how is the previous day closed? If the previous day closed awful, we're walking away. We're not even waiting for a trade. We're leaving the chart. If it's closed in our favor and we understand that the momentum's continuing to the upside, for example, with a bullish candle close the previous day, we are looking to take buys under the Asian range or under the midnight open, depending on what presents itself first. All right, traders, hope this helps you out. I will start releasing more outlooks so you can see what we're looking at. And we may, in the new year, do a bit of live trading each week, possibly on a Tuesday and Wednesday. We find that's the best days of the week for us. All right, have a good one. Cheers.